Hello, all. Welcome to Big Numbers Law. Today we are analyzing US oil, Indian context, crude oil. So, what happened today? We had a good inventory coming up, though it was all known the inventory would come up at a lower supplies, and we would have a good price up. We still got trapped out. I don't know, yeah, but I was in a position where I had bought some good contracts, good number of contracts. How had I analyzed earlier itself is what we are going to see today. It's not about me. Let's start afresh. So this is just a educational video. Making it clear how it will help you if you keep the analysis ready and why this there was a good trap in here and what is happening overall in crude oil. Let's cut to the chase. This is where we saw a good consolidation of after a lower low makes it a first wave up will give us a Elliot wave. Before that, we will mark Wyckoff last lower low, first high, and first higher high. So this is where all the accumulation happens. So in the accumulation phase, we have to sit straight and not do anything. But we can buy here, sell there. But still, that will be a gambling. In crude oil, it is almost the trade that people expect. But I prefer to sit in a good run trade. So that's why I waited till it comes out and then plotted Elliott waves. Elliott wave 1, 2, 3, 4, and 5. Let's assume 5 there for now. So, but in Elliott wave, it's very easy to draw a five wave pattern, but sit in a trade with the five wave pattern is very difficult because trading is all about money, not this charts. So, this will give you a place where you have to cut your trades and plan your trades. So, as per Elliott, we will draw a good impulsive channel line and a corrective channel line. Firstly, actually, that is what was supposed to happen, but this was clearly a trap. Clearly a trap. We will see that later. I'll delete that for now. I'll show you what happened really in here because we all had the data coming previously. Inventory was also low and this inventory also was expected to be low. When the inventory is low, we are short of supply. So that uh, is in a simpler way it is demand. uh, I mean higher the demand, but still we did not we gone into traps of institution. When I say we, I'm doing the video for mm, normal retail traders. So in the correction waves, analyzing the correction waves, I switch to hourly time frame, and impulsive waves I'll switch to 4 hourly time frame, that is one time frame below the daily. So let's now talk about the hourly time frame, sorry, second wave now. So second wave was a mm, sorry guys, second wave was easiest wave, that is a simple wave. In Elliott we have simple waves. Okay, sorry, this is yeah, here this is ABC simple correction. But the simple corrections C wave did not cross the A wave's low, and it did not qualify to be a zigzag. A zigzag is a wave which comes like this. It has to be like this, but there was no visual Visually it was not a zigzag. Well, the reason for this is, as Elliot mentions this in his books, the people who are trading on the contracts are in a hurry to grab the contracts. Well, there is a big move, bullish move of wave one. So that's the reason, often in commodities as well as in stocks, wave 2 tends to be a shorter wave. Whenever we see a shorter wave 2, it is expected that the wave 4 will be a complex correction. So complex corrections will have two of the zigzags, or two, or it will be a flat, something like that. So so it was already expected that the fourth wave will be a complex correction. But fourth wave correction, we have a idea given by Elliot that it should not uh, cut the wave once high. So this was marked earlier. So we knew that the complex correction, or whatever correction that is there, would not go beyond this level. So so that was one confirmation, and I was waiting to see the lowest point here. But still, coming to the analysis, we had a we'll analyze what happened out here. Switching to 4 hourly time frame to draw third wave pattern. Third wave being a impulsive pattern, we have a good one, two, and three, and four, and five. We'll change the color to green, or lighter green for now. And we have 3 year 5 wave structure to complete the third wave. And we will switch to 1 hourly to analyze fourth wave, a complex and a manipulative wave. Let's see what happened there. Switching to ABC, because we won't initially know that it would come here. So initially we will know that this is the high. And when there is a lower high, we get to see that this is B. And we expected it to correct until here and then run up, but it did not. Uh, if you see the correction retracement, it did not correct up to 382 at all. So 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 we did not consider this as 3, but we considered this as 3. And then we thought there is a move up, wave 5. This is a zigzag. But then we saw there is a complex, we knew that there is a complex correction coming, as our second wave was very small one. And even institutions uh, never give out all the contracts to the retail institutions, because retail traders, as you know. Again, if it goes by now, uh, cutting the B wave, again there will be aggressive entry from the retail traders, as it happened in the wave 2. And then again it will push out to a, good high, making institutions have only lesser volume, lesser quantities of contracts. So they wanted to have it a good correction. And even all the sellers, all the buyers that had bought in second wave had all sold, seeing this large C wave correction. But still, again, they thought, when there was a higher high happening in here. Second, sorry, higher high happening in here, they thought it as a chance that they can buy now for a good high now. I mean, for the fifth wave now. But institutions had a different play in mind. That is a complex correction with, I'll tell you why I did not mark X here. Usually the first we have to attach a to the C wave. To attach a to the C wave, it is not possible because correction and correction won't mm, I mean won't should have any other wave in between. That is the rule. So the correction was complex and we have two corrective waves coming up, so that's the reason we use wxy. We will not know where the y will stop. We will take as and how it changes. So now as we know, this is where y is stopping. That is because we have two confirmation. One is the low high of the wave one. This is very near to high of the wave one, and there is another reason I'll tell you. So here is where you see, uh, you draw a b c corrective pattern again. 0 a b, sorry, from x, from x a and b and c. If you see, there is a small difference in the drawing. This is not a zigzag. Zigzag is usually where the b wave doesn't go beyond the zero start of the a wave. So here, as it is going beyond the start of the zero, that is a waves starting point, it is called expanding flat in the Elliot term. So this is where the expanding flat is where the C point will be more or less equal to the second wave. If you measure it this way, and yeah, this is what happened here. This was one confirmation that the price will reverse from here. And if you go to the demand and supply zone, we have here two impulsive candles coming up and a base candle here in the daily time frame. So that is another area of confirmation. What is this? What is demand zone or a supply zone? I'll tell you what that is. This is where the institution enters for a good move up. So institution doesn't sell their contracts at their buying level. They would have sold at this level some of their contracts, and even when they are buying it back, they will buy it back at the same level. So today, after the complex correction, there was a panic selling happening. All the panically sold contracts were grabbed by the institution at their buy level, and that's how we saw there was a there was this manipulation happening. If you see, it will not even close below that in a daily chart. So that's what we got to know. That's how we got to know that this is where the price will reverse. And then coming to our next move, it is again quite easy one. Where will the fifth one stop is the second question now. As we had a bigger third wave, this is the third wave, right? From first wave, this is the second wave's end, and from here we have third wave till here. We had a big third wave. uh, it is Elliot's, there is a rule, fifth wave rule. If you have a big third wave, it is always better to mark wave once, measure the wave one, and then take it to the wave 5. Yeah, guys. So the intersecting point is at $88, and that is where I'm expecting this to move. So that's it, guys. I hope now you will know uh, what is happening, what happened today in the trading session, crude oil trading session. Uh, so I hope you enjoyed this video. Uh, I would be happy if you guys subscribe to my channel, and I'll put in more efforts to make this video easy and understandable way, because I am not much experienced content creator, but I'm an experienced trader. I have been trading crude oil and other stocks, mainly Indian stocks, nearly from 2017. Before that, I was investing in stocks, but in 2017, I started trading these markets, and I have mastered Elliot waves, demand and supply zone. Um, in US, it is called institutional demand and supply zone. This is uh, given by Sam Seiden, and there are many many additional alternatives made to that, adjustments made to that to create it in a, I mean, to give a good meaning to Sam Seiden's demand and supply zone concept. So that is a timeless study. Um, and I'm also a master of Wyckoff study. Not that I'm good in predicting the futures, by using Wyckoff, uh, but I can say where is the accumulation zone and all that. But Elliot, I can predict the future price movement and everything. So to bring in more of my knowledge, it would be very motivational if you guys subscribe to my channel. Thank you for your time. Have a good day.